Hi, my name is Nandor Elia and I'll be explaining about the real life case study for consumer loan. So the case study that we have find is titled Financial Management Issues of College Age Students, Influence and Consequences. So the case is the impact of the cost of attending university substantial for college students, irrespective of whether they bear the expenses. The average cost of a 4-year public college education in 2001 was 11,496, and over the next decade, it is increased by an average rate of 5.6%. By 2011, the average cost reached 17,131, indicating an almost rise 50% rise. These trends align with findings by Hannah Kelke, um, These trends align with findings by a study in 2015, revealing a 31% increase in the cost of private institutions and 44.2% increase in public institutions between 2000 and 2010. Despite the increased enrollment, particularly at public college financing for rising costs and nationwide student loan crisis, sorry. Despite increased in enrollment, particularly at public college financing for rising costs and nationwide student loan crisis. So the lesson that we have learned from this case is that the case mentions a student loan crisis, indicating that the burden of financing education often falls on student loans. This case study emphasizes the value of financial planning, making educated decisions, and advocating for accessible higher educations. Borrowers should be cautious about accumulating excessive student loan debt, exploring financial aid options, working part-time, or even choosing more affordable institutions can help manage the cost.
Anyone that need to apply for a credit card, they need to have a permanent jobs or employer, because they need to ensure that they're able to pay for the debts. So credit card mostly used for a person to buy groceries or to proceed with the shopping or daily life item. In 2009, Malaysia, there's 1,086 civil servants who were declared bankrupt, and their salaries were held for installment payment. This was reported in Sunday, 2011. The news stated that most of citizens or most of the user of credit card, they paid the debts half of their salaries. We can view this as a concern where the people doesn't even understand how to manage their financials. Some people doesn't even understand how to manage and use the credit card, even though that it gives a lot of benefits. Most of them are likely to purchase an item and they felt like the money is belong to them. Well, actually, if you overspend the credit card, you are actually facing a bankruptcy. The repayment that you should be made might be highest than your salaries. So please be careful whenever you're choosing a credit card or spending on a credit card. We believe some people are having a very huge problems in the financials until they are trying to face or to apply for a loan sharks. So once the people lose the jobs, they are unable to repay for a credit card, and this will happen for bankruptcy. So lesson that we learn, we need to able and ensure that we have enough of finance or a stable financials before we proceed with a debts or credit card. And some people need a consultation before proceeding with applyment on a credit card, because not all of us are ready to face with this financial commitment.
Assalamualaikum, my name is Nur Alina Sofia and I'll be presenting the real world case study for real estate lending. So the case study is where the financial crisis of 2007 to 2009 resulted in a severe mortgage foreclosure crisis, with approximately 4 million families losing their homes and another 4.5 million facing foreclosure or falling significantly behind on mortgage payments. Following the collapse of the housing markets, the mortgage foreclosure rate, which had previously been less than 1%, increased. In 2009, 2.2% of homes, 1 in every 45, had at least one foreclosure filing. Failure to make monthly payments and declining home values were the primary causes of mortgage defaults. In the fall of 2010, 1 out of every 11 residential mortgage loans was at least one payment late and on the verge of foreclosure. 22.5% of mortgage holding households, or 10.8 million households, owed more on their mortgage than their home's market values. Regrettably, the Home Affordable Modification Program (HAM) and other federal and state programs designed to tackle foreclosures have largely failed. So, the lesson for the case study, buyers should approach becoming a homeowner strategically, taking into account their financial situation and the states of the market and any potential dangers. It is essential to have a deep understanding of the real estate market. Furthermore, having an emergency fund is necessary to handle unforeseen expenses, particularly when having trouble paying your mortgage. To ensure consistency in monthly payments and safeguard against interest rate fluctuations that could exacerbate financial strain, consider choosing fixed rate mortgage.
So, for the recommendation on consumer loan, firstly, analyze your budget and affordability. Make sure you have enough money by creating a detailed budget before taking out consumer loans. Don't take on more debt than you manage to pay back. Next is terms of research loan. Examine consumer loan terms carefully, paying particular attention to interest rates, cost, and repayment plans. Select loans that offer advantageous terms and conditions. And lastly is to examine other alternatives. Before taking out consumer loan, think about other financing options like emergency savings, personal savings, or even looking for lower interest options of consumer loans.
Credit card is not actually a bad thing to be applied for. It's not known as a very critical debt that will drag you into a bankruptcy only, but it's actually can help you to improve your credit score. So here are some recommendations for you guys to learn on how using the credit card. First, manage your credit limits, which is ensure how much you're going to spend for a month, and ensure that you're able to pay for the commitments every month, which is the repayment. Please avoid overspending your credit cards or overspend your limits because it will cross your standards or able commitment that you need to pay, and you will turn out to be a bankruptcy or you are unable to pay for it, and it will turn out make a deep negative credit score. Next is ensure you complete your payments monthly because credit cards still need to pay for a monthly repayment where you have to pay every month for an item that you have purchased. As an example, if you are purchasing an iPhone with a credit card, the monthly repayment might be 200 and plus. So please ensure that you are able to complete the repayment every month. Not even that, you have to track your credit score. How? Credit score can be checked through the CTOS. Ensure that you learn the terms and conditions before you proceed with the credit card. And figure a credit card with a lower interest so you are able to pay further interest for every month. Ensure that if you are able to apply for a credit card, you're able to pay for it. Because not all of us are able to apply for a credit card. It depends on our commitments. So take a credit card as a good thing to help you for your businesses or to make a profit on yourself. And use the item that you purchased to make an income for you to repay it back for every month. So that's all from me for a credit card recommendations. Thank you.
Moving on to the next slides, there are a few recommendations for individuals to make informed decisions regarding real estate lending. First, fixed rate home loans. To ensure consistencies in your monthly payment and safeguard against interest rate fluctuations that could put a strain on your finances, consider fixed rate mortgage. Second, emergency fund for real estate owners. Create and keep an emergency fund designated for home ownership. This fund can help with unforeseen maintenance expenses for the house or short-term income loss. Third, research market conditions, keep up with the state of the real estate market. When making real estate decisions, take into account variables like property values, interest rates, and possible shifts in the economy.
So for the last part of our presentation, I'll be explaining about the border explanation for this project. So basically, firstly, is reducing risk for lenders. To avoid defaults and financial crises, lenders should place high priority on responsible lending practices, which include careful borrower assessment and risk mitigation techniques. Next is initiatives for financial education. Launch extensive financial literacy programs to equip people with the information they need to make wise choice regarding borrowing, debt management, and home ownership. And lastly is keeping an eye on economic indicator. Keep close eyes on economic indicator about consumer debt, lending practices, and real estate markets to spot possible threats and take appropriate action. So that's all from us. Thank you.